Hey everybody, I'm Coach Bree, and if you don't know who I am a full-time futures trader and I swing trade options. I've been trading for nearly a decade, and I am the founder of the Trend Fusion Algo. So today I wanted to hop on here to walk you guys through my trading strategy on how I consistently pass these prop firms and get payouts. So today specifically, I'm going to be discussing a 50K account. My risk to reward, I'm going to be talking about my trade management, also my psychology, and also I'm going to be just talking about the strategy in general. All right, so let's start with the 50K account. Now, it's literally all statistics, it's all math here. So when it comes to a 50K account, most prop firms, they have a 3K profit target and they have either a 2K or 2.5K drawdown. So some prop firms have trailing drawdowns and some just have a total drawdown. Now, the one prop firm that has a 2.5K prop firm specifically for futures is going to be Apex. So if you're a newer trader, that may be the route you want to go down because you have a larger drawdown compared to the Top Step and the take profit traders and Tradeify and things of those natures. So you want to make sure that the prop firm that you pick and the trading style matches. Okay. Now, one other thing to note is most of these prop firms typically have like a daily drawdown. It's usually like 1K. So I know Top Step has the 1K, and if you lose 1K, they'll knock you out the account, but you can still trade on it. Take Profit used to have a 1K daily drawdown, and if you breach that, then you would fail the account. But I think they removed that. But definitely do your own research there. So you want to make sure that you're picking the right prop firm. I personally don't like the daily loss limit, so I love trading with Apex. But I do have my risk set prior to taking any trade, right? As soon as I purchase a eval account or even get funded, I make sure that I implement my risk settings. So now let's talk about per trade. Now, when it comes to a trade and I'm trading an eval, I want to be very strategic on when I enter a trade, the type of setup that I'm taking, because I don't want to be trading this forever. Now, if you're strategic about this, you'll realize that if you're trying to scale these accounts, you want to take your time. There's no reason for you to trade and try to pass it in one day. Most of the time you're going to blow your account because if you're trying to pass an account in one day, you're going to start to force trading setups. You're going to start seeing things that aren't there. Okay. So you want to spread out, maybe create a small goal like, okay, I want to make $200 a day or $300 a day in this account until I pass it. You really want to be trading what the market gives you, but small goals like that are very realistic when it comes to this prop trading. This one candle right here is probably equivalent to about $100 or something like that. So you can make money very easily, especially if you're trading the minis versus the micros. Okay. Now I'm going to talk about the minis versus the micros a little bit later. So if I'm trading a 50K account per trade, I only want to risk 1%. Okay. So if the profit target is $3,000 and I'm risking 1% per trade, that's about $500. Now, if you're trading things like NQ or ES, you would have a really, really tight stop loss, right? So instead of trading NQ or ES, I would typically trade the micros, right? So the MNQs, the MESs, MGC, and that's because it's going to allow me to really allow my trade to play out, right? Because that $500 risk is going to be a lot larger on a micro trade versus a mini contract. So I'll show you. So for example here, say my risk is $500 and I can see price is selling off a little bit and I decide to take that trade. Simple 2-to-1 risk reward. Okay. Now, if price bounces up here and knocks me out the trade, which it very easily well can, because that's like one candle, you have to be spot on when you're trading the micros, especially if you have such a small risk. Okay. Now, sorry, I meant the minis. Now, if I'm trading the micros, let's go to MNQ. I can trade a half size, which is 5 contracts. Okay, risk about $500. And if I'm looking to take a sell, I can hold the trade a little longer and my stop loss makes actual sense. So right here we have our 618 golden fib. If price breaks above this 618 level, then we are going to reverse and price action is starting to turn bullish. Therefore, I had a small loss, but my stop loss made sense and I'm able to stand the trade a lot longer compared to that NQ trade where if price would have hit right here, you would have been knocked out. Now, keep in mind with this $500, if you're trading micros, you can scale down. You can trade 2 or 3 micros, and now you can make your risk $500 a day. If you make your risk $500 a day, then you'll be able to keep your account a lot longer, right? So I have very strict rules when it comes to um, my trading setup and when I'm entering a trade. If the trade doesn't make sense, I'm not entering it, right? Now, this would potentially make sense on a smaller time frame. I would need to see if price action is going to continue to sell off before I enter this trade. You never want to just hop in just because you think price is going to move down. Every time you take a trade, you need to be looking at higher time frames because the worst thing is getting in a trade, it looks like it's going your direction and you get knocked out of the trade and price completely bounces on you because there was a support on the 15-minute chart and you didn't take the time to actually go back and look at the trade, right? And look at your different time frames. So time frame alignment is really important when taking these trades. Now, in terms of the actual strategy, I use the algo all day, every day to trade and pass these prop firms because a lot of times, especially if you're trading the NASDAQ and GC, they make such large movements in a day that it's easy for me to extract $500 or $700 from the market and be done, right? I don't try to pass it in one single day. I spread it out over a week or 2 weeks, right? If you do that, then when you're trading, you're going to be a lot less stressed and you're going to reduce the amount of exposure to the market, right? So the less you're in the markets, the more you'll make. So you don't, like I said, you do not have to pass this in one single day. It's actually better if you pass it over time because you can find higher quality setups and you are just reducing your risk and your exposure in the market. Okay. So now enough with all of that. Let's talk about the actual strategy and how I trade it. So with the algo, I like to trade on the 1 minute time frame, right? Specifically during regular market hours, if I'm trading things like um, indices like the NASDAQ, the S&P 500, Dow Jones, the Russell, then I'm primarily trading at specific times. Like I like to trade the New York session, and from time to time, if I see a move when there's no news, of course, then I'll trade the London session if that setup is clear. Now, when I'm trading things like gold, I can trade it during the Asian session. I can trade it during the New York session or London session. It just depends on the asset that you're trading. So specifically for NQ, taking any trade, I always start by doing a quick top-down analysis so that I can get a better understanding of what the overall trend is. So I'm looking here at the daily chart and the NASDAQ has made all-time highs multiple days in a row. Now, you see this massive volume block here where it's a negative number, and every time we hit it, we sold off, okay? So we sold off here and we sold off here. Now, we broke over at this time, but we are consolidating right in this area. So for me, if I see price break below this area in coming days, then I'm going to look to short it. And the reason why is because price is now going to be below my linear regression. And it's actually, it's actually below our linear regression now, which is telling you that price action could potentially start to sell off. So I'm very cautious of that. And then I can see that the bears are in the lead. Now you can see that the bears are in the lead here. We're below our linear regression line and we got some massive selling pressure. Okay. We got bearish momentum on the daily chart. So that makes me a little cautious that we got some selling pressure. But the last time we got selling pressure, our oscillator never turned red. This is the type of selling pressure that I'm looking for the absolute trend to change. But as of now, we're right below it. So as of now, we're technically bearish, but this candle hasn't closed. So I'm going to still say the daily chart is bullish. Now on the 4-hour, things are starting to differ here. I also look at the hourly chart. We're below there. The 15-minute. This is where price bounced. We had a really big bounce here off of our demand zone. So you can also see that this demand zone was equivalent to our 0 fib, and it had a big buying volume block. So it makes sense that price bounced there, right? We've hit this area 1, 2, 3 times. Every time we hit this area, we had a really big bounce. Now, if price were to break back above our linear regression line on this 15-minute chart, which is our smaller time frame, then we could be looking at a potential reversal. Now, also on the 5-minute chart, we just broke back over it. So I would like to see price come back down below it for more shorts. But overall, we looked at 5 different time frames, and 4 out of those time frames, technically, if you want to be technical, 5 out of those time frames were bearish. So the best types of trades, so the best trade is going to be to follow the trend. So for a bearish trade, I would look to enter a trade to the downside if I see these 3 things. So first thing, on the 1-minute chart, I want to see consolidation, just like this actually, below a supply zone. So this supply zone was just created because it only was touched 1 time. We also made a swing high, which you may be able to see this green line right here. We made a swing high right there. Okay. So typically after swing highs and swing lows are made, we get some type of reversal. You see right here, which is that demand zone, also right here. And then the most recent swing high was actually up here. Okay. Now, also paying attention to market structure. Our supply and demand indicator, it tells you what the structure of the market is. It's telling you that price is making lower highs, higher highs, higher highs. So this is bullish, right? So we made a higher low, lower high, higher low, higher highs. So price action was bullish. Now we are selling off. I want to see a higher low, and that'll give me a little bit more confirmation to day trade. Now, price action is also bearish. We can see here that the bears are in the lead. We got our bears in the lead right here. We got bearish momentum here, but we have a fade in the bearish trend because price action is starting to stabilize. There is a volume block right here, which is acting as support, and our 0 fib. So until we break this level, I'm going to not take a trade. I need more confirmation and a algo signal for me to enter this trade. Other than that, the only good trade setup that I would see is if price breaks above the supply zone, rejects, then I would enter on the retest back to the downside. But as of now, we're making a new swing low, that red line right there. So we may get a little bouncy bounce, but we shall see. I'm only waiting for high quality setups. And this setup right here is not a high quality setup. I would say this is a B setup, not an A plus setup. The A plus setup is when everything is aligned. So we got our entry and price. I would have loved, like if I would have taken along here, I would have actually loved to get in at a retest of the entry. Now, for example, if I were to take this particular trade, from my entry to my stop loss and my take profit, it's a 1-to-1 reward. So that means I'm risking the same amount that I'm going to make. Okay. Now, I usually aim for a 2-to-1 risk to reward. So when I'm taking these trades, I like to make twice the amount that I'm risking. So it doesn't matter if I make, $500, $1,000. I like to use that same risk to reward. Now, when I'm taking these trades, so just for example, let's take this paper trade here. So I'll take this long trade here. As I get into profit, I would roll my stops up. So as this profits and it hits this red line, I would roll my stop up probably to break even, right? That's the key to passing these prop firm evaluations. You want to make sure that you're rolling your stop up. So just in case the trade ends up going against you, you still capture profit. If you use the right risk to reward, like a 2R, you're rolling your stops up. You're not trading trash setups. You're only trading high quality setups, which you should typically get maybe 1 to 2 a day. You're going to reduce the amount of trades. You're going to reduce the over trading. So I say all that to say that trading prop firms is really not that difficult if you follow rules and manage your risk and just be disciplined. The less you trade, the more you make. Remember that. When you start to overtrade or you get too confident and you're on a winning streak and you make $600-700 in a single day, and you're like, okay, cool, I want to try to take one more trade. Let me see if I can make $1,000 a day. The moment you think that, you should shut your computer down because you're likely going to overtrade and give away all your gains, right? Think about it logically. Do you make $500-600 in a day at your current job? If you don't, I don't understand why you would try to chase more or not be satisfied with that $500 to $600. That could be very life changing for someone. So if we really start to think about this practically and think it through and get out of that gambling mindset of trying to pass these evaluations as soon as you can, then you could really make some really good money trading prop firms. You can trade multiples. You can start to scale up. You can turn it into a business. There's so many avenues that you can take with this. All right, that's all I have for you. If you want to try the Trend Fusion Algo out completely free for 7 days, the link is below. Lastly, if you want to work directly with me one-on-one and become a consistent trader, start to get those payouts and trade independently, you can find the application to apply for my mentorship below.